Welcome back to the channel. I hope all of you are having a great day. So today's a pretty big day. Today is when the unemployment data comes out for September, which is basically backtracking and lagging a month. On top of that, we have more degenerates day trading in the crypto markets than usual. And then on top of that, we also have to go into Bitcoin and Ethereum's prices, put them together, see what's happening, and then we have some important charts in terms of the short term of what can happen to our price and what we need to analyze. So if any of that interests you, make sure you subscribe and like the video down below and leave us a comment of what you liked about the video. Let's get into it. So like I mentioned before, today is a very important day in terms of the unemployment data. Now, at first you might be thinking, why does it matter about unemployment? Well, if you have not followed this channel or followed the macroeconomics, the Fed is raising interest rates. If you raise interest rates, especially during a time like this, you are also looking at a likely recession happening. A recession is also looking at unemployment. If unemployment gets high, that's usually when they start to trigger the recession. Trust me, I know you're preaching to the choir. It really does feel like we're already in a recession, but in terms of some economists in the Fed, they really look at unemployment. So what we do is today is when unemployment comes out and they're backtracking a month, so they're lagging a month. So looking at September unemployment data, and whatever that number comes out to be, if it's higher than 3.7%, that is bad for the market. Now, one reason it could be bad is because as the Fed raises interest rates, the risk on assets like Bitcoin, the stock market, and some commodities start to lose value. And then what we have is US yields continue to rise, which basically means more money is getting poured into the US dollar, which means the markets are falling. And for the first time in a long time, since 1984, the US yields have risen 10 weeks in a row. Now you might be thinking, well, this last week was very low. Yeah, but if you look at the last time it was very low, we had this massive rise. So maybe either we get this massive rise or we could, print down lower. But it's not for me to predict. It's for us to look at the data of what we have and what that could mean for the future. And getting on the topic of high leverage, basically when I was saying degenerates are basically trading in the markets, whenever you have high leverage ratio in the markets, that's typically when day traders are getting a little bit more risky in the markets. They're putting a little more money, they're putting a little more leverage. They're, in the sense, I like to think gambling, because I used to be a day trader, and trust me, day trading is very, very difficult and very, very addicting. But basically what I'm trying to get at here is that the leverage is extremely high, which means there's extreme volatility that could be coming, because we haven't seen this since 2019 or even past that. So the leverage is extremely high, but yet the price has been stagnant. That's also because the funding rate is somewhat neutral. But on October 13th, the US CPI prints for September, and it will be made public. Now, basically this means is, where is inflation? Because if unemployment data comes out today and it's higher than 3.7%, that tells the Fed that we're starting to get more unemployment, which means it could be leading us into a recession. And again, the main reason they're raising interest rates is because they want to lower inflation. But if unemployment rises and inflation doesn't go anywhere, that is a very bad thing. And that could mean very bad things for the markets. So with this increased volatility and potential bad outlook into the future, we could have some price volatility, especially to the downside. So make sure you're aware of that. But I don't just want to talk your ear off on all of that stuff. Let's actually go into the charts. Let's look at Bitcoin and let's look at what's going on. So right now, currently we are on the 4-hour time frame of Bitcoin. And one really important thing that I want you guys to realize is that when you look at Bitcoin's price, currently it is coiling up. It is making higher lows and lower highs, basically making this little pendant. And anytime that we're, in a downtrending market, something similar to like what happened over here, whenever price starts to consolidate and price doesn't really go anywhere, that's when it starts to get a little bit more volatile, and then you can get big moves to the up or the downside. And in the market conditions we're in, the downside is much more likely. Now, on top of that, if you look at the market structure, basically when we got to this low of 17,500, the market started forming an uptrend, basically higher highs and higher lows, until eventually we broke all the way down, breaking this market structure and now forming our downtrend. And what we're getting is our first push to the low, then we had a retracement, and now we made our second push because this low was lower than this low. So what we're getting is a downtrend in the market. And one tool I really like to use is the Fibonacci tool. Basically, this is kind of like a mathematical equation. I'm not going to go into it too much, but it helps us understand possible retracements and extensions in the market. Now, I know these lines and colors may not mean a lot to you, but basically what we're doing is taking it from the high to the first push of this low, and we're seeing how much it retraced. So it retraced to this green line, which is a 61.8% retracement. The number does have some significance in terms of Fibonacci nature and just how the market moves, but typically green retracements will go to green extensions. Not always true, but very likely. And so what we're looking at is a possible drop to around 16,000 to 15,700, which, could be a macro drop and a big consideration. Now, one interesting thing I do want to point out to you guys is that when we look at Bitcoin's price during any bear market or, the lowest drop it's ever had, it's never fallen below this green line, which is very interesting and actually a pretty decent indicator in terms of bear markets. Well, if you're wondering what this line is, it's the realized price of wallets holding a balance between 10 and 100 Bitcoin. Now, you might be, talking to yourself, well, this isn't a whale. This is a significant amount of Bitcoin, yeah, but it's also not something that's a market mover. They don't have enough Bitcoin to really move the markets, but it is a decent amount of Bitcoin to where the investor is most likely someone who is buying Bitcoin back around these lows or back around these lows. So the person either had a lot of money or has a lot of money and, does have some significance in terms of price. But if we look at the most recent bottom that it's printing right now, the low is at 12,480. And so if we look at how accurate this indicator has been in the past, then what we're asking ourselves is, can it be an indicator for the future as well? Doesn't mean it has to get to 12,400, but if times do get very bad and these types of wallets are, being a source of some, sort of buy liquidity or buy pressure at this price, because that's their realized price and they don't want to go into debt or into any drawdown, then maybe this is a really good area or a bottom for Bitcoin if it does get to that point. But how can we talk about Bitcoin without talking about Ethereum? Now, we haven't talked about Ethereum for a little bit on this channel, and I think it's a really good idea to bring it back up. Now, I think Ethereum serves as a proxy for the altcoins in the market because Bitcoin is seen kind of as your digital gold and your safe haven, and Ethereum is that first kind of blue chip layer one. But at the same time, it is also seen as kind of an altcoin. And what we're seeing is that on the daily, there's a massive downtrend that it has been following. And just as of recently, it's broke down to the downside once again. If you take this and kind of pair it up right here, you could see that it was uptrending just like Bitcoin, right? Making those higher highs and higher lows, met this major downtrend and broke below. Now what we're getting is another very small and significant one. And what we could get is another break to the downside. So what I'm doing right now is using our Fibonacci retracement tool. Same exact principles that we used on Bitcoin. We're taking it from the high right here to the first push right down here. And what we got was a retracement to this green line. And then we had an extension. Now it didn't necessarily meet the green line, but it did reach in between the blue and the green level, which, it could drop a little bit lower, but let's just say that is a complete wave to the downside, right? So we had our first push, retracement, and then the extension. So since that, to me, and again, this doesn't have to be perfect, is validated, what I'm going to do is move this to the low right here, and I'm going to move this to the high, the retracement. And now what we're looking at is a possible retracement. This is the second drop, a retracement level to this blue or the red, because this is in confluence with this major downtrend, which could serve as a very important ceiling. If we extend, we could be reaching levels of $770 to $650, which again, may not seem like a significant price drop since we're only at 1,300, but when you're talking about how much of a percentage drop we could be seeing, it's close to around 43 to over 50%, which is insane because that still gives a lot of the altcoins to drop just as much, if not more, in terms of price and percentages. And that's exactly why I wanted to look at the pair of Ethereum and Bitcoin, which you can see in the top left corner right around here. So this is basically taking Ethereum's price and dividing it by Bitcoin's price, which is an extremely important indicator in terms of seeing what asset is better in terms of the short term and medium term. Now, currently we're on the daily, so this is somewhat of a longer term outlook. I mean, we're looking back at data in the middle of 2021 to basically right now, so months and months of data. And one chart that I really wanted to show you, which I'm going to make a video solely just on this and Bitcoin's price and Ethereum's price, is Wyckoff distribution schematic. Now, basically this is an extremely important schematic. I've talked about it earlier in my videos, like months and months before. But basically, it was created by a stock genius or someone who is extremely involved in the stock market way back in the day. And he basically made this schematic because it happens over and over and over again. And it takes into account price psychology, large market movers, and then how institutions trade. Basically, what we're going to be looking at and pairing with Ethereum Bitcoin is a distribution schematic, which is basically a sell-off schematic. So what you have is let's actually jump to the chart and then I'll kind of, so keep this in mind, right? We have our buying climax, our first push, an up thrust, our second push, and then we have our last point of supply, or basically, a lower high in the market. Now let's head over to Ethereum and Bitcoin and look at exactly the same thing that's happening right now. So what we have is these red lines basically dividing the phases. So phase 1, phase 2, phase 3, and then phase 4. Basically what we have is our buying climax coming up to the high. Everybody was freaking out, Ethereum and Bitcoin and everything's doing well. And in terms of Ethereum, it was doing much better than Bitcoin. Then what we had was our second thrust, which then initiates phase 2. Phase 2 is basically where you get your all-time high, so to say. And then you start to kind of reverse the trend. So as you could see, we had our all-time high, but then at the same time, you could see that these lows were taken out and then the market shift to more of a downside. And basically what happens then is that you have your last point of supply, or you can say your lower high. Many people start to get stuck here because this is where the market starts to consolidate. Many people think you're going to make a higher high and break through this. And then what happens is a lot of manipulation happens in this area. A lot of people start to, get impatient. Fake outs start to happen. And then when you enter phase 4, that is when you really start to see the sell off, and then you go into a downtrend. And when we look at this historically, this has been a really good point of reversal for Ethereum Bitcoin in the past. I mean, right here, obviously we got to higher points right here, but at the same time, we still came back to the downside and we dropped all the way down here. Now, in terms of a bear market, this is exactly what's happening, because as riskier assets start to lose more value, like 40 or 50 or 60%, people would rather put their money into Bitcoin that's only going to lose at this point maybe 10, 20, or 30%, or just move it to the dollar where it's only going to lose percentages. And so what I'm trying to say is that if you look at Ethereum as a proxy for the altcoin market, when the altcoins start to dip a little bit more than people would like, they're going to be taking their money out of those layer ones, out of the altcoins, out of Ethereum, and they're going to be putting it into Bitcoin because it's a little bit more stable and it's been a little bit more trustworthy. And that's exactly why when we look at Bitcoin dominance during the bear markets, right, January of 2018, Bitcoin dominance skyrockets. Why? Because money's coming out of layer ones, out of altcoins into Bitcoin, because it's, seen as a safe haven in the cryptocurrency market. Then we have a bull market right around here. This is when we have a rise. And again, Bitcoin dominance drops. Why? Because money is chasing faster horses. But during bear markets, which we are entering or we're already in, that's when the market starts to go up for Bitcoin dominance, because you're not looking for faster horses. You're looking for assets that will lose less value over time, which again, in the cryptocurrency market is Bitcoin, because it's the slowest mover at this point, because it's the most established. So what we have is a very interesting time where, yes, everything is going to continue to fall, in my personal opinion, and maybe we could reach levels of, let's say, right around here when we drop to around 16,000, or maybe to the lowest low of 12,500 right around here. It really depends. But no matter what, if this falls, all the way from right around here, we're only looking at a 17% drop, or at most a 36% drop if that is the low, versus Ethereum that has the chance to easily drop at least 40, 50, or 60%, and not to mention altcoins who can still drop at least 75% or more. So you're asking yourself, where do I want to put my money? Bitcoin is going to be the slower mover. And then again, that's why a lot of people are taking money out of these risk assets, because it's just safer for them to put their money into the dollar, which, yes, inflation is 9%, but at least you're not losing 17 to 36%. And again, as all of this macroeconomic data comes out, unemployment comes out, it will come out before this video at 8:30 a.m. And then we have our CPI, and then we have, geopolitical stuff that we have to deal with for the next few months. I mean, we're still looking at a lot of bearishness, but that's everything I have for this video. If you guys did enjoy it, if you found anything educational from it, definitely subscribe and like the video down below. And in the comments, let me know what you liked about the video and what we could do better for the next one. Till the next video, see you guys then. Peace.